Good morning, everyone. It is 11:30 and we want to be mindful of your time, so we will go ahead and kick things off. Thank you so much for your time this morning. We are Blue Heron Financial Group and we are located in Annapolis, Maryland, but we have the privilege of working with clients all over the country, many of who I see are popping into the meeting today. We want to thank Northrop Grumman Federal Credit Union for the ongoing partnership, which we have had spanning 24 years. Here at Blue Heron, we specialize in retirement planning, which we have been doing for 27 years. And we've got a really great presentation for you today. We are so lucky to have Emily O'Halloran from MP Group as our guest speaker. Emily and the whole team at MP Group have been such a wonderful resource, not only for us, but also for clients over the last couple of years we have been working with. They do such a great job providing education and helping to navigate the complexities of Medicare. So we are so thankful, Emily, for your time this morning. And without further ado, I will hand it over to you.
All right. Good morning, everyone. Sarah, thank you so much for all of your kind words. And we are always happy to be here. Thank you for having us. And this morning, I also have with me one of my team members, Claire. So she's just going to hop on so that everyone can say hi and see her. And she's one of the several folks on my team working with clients. And we're going to tell you more about that as we make our way through the presentation today. So we're going to talk about a few things, and we're going to talk about these things at a fairly high level. We're going to specifically spend a little bit more time talking about some of the very specific changes that will be happening for next year and how those will impact folks, especially those who are currently on Medicare coverage. So we'll hit a lot of things at a high level and a couple of things very specifically. And since we're not able to take a live Q&A or chat, I'm going to be sharing with you all my insights on what the most common questions are that people will ask us really regularly. So I think I know what a lot of you are probably thinking about and would like to ask. Of course, it goes without saying, we won't be able to address everyone's specific situation. So you'll see our contact information, mine here on this screen, and then you'll see that at the end of the presentation as well. And we certainly encourage everyone who wants to talk about their specific situation to reach out to us directly, and that will be the best way for us to advise you with your specific Medicare questions. All right. So, as Sarah said, we are MP Group. Some of you may know us by Medicare Portal. There was a Medicare law that changed our name last year. So we're now MP Group, but we are the same organization. We are an independent Medicare insurance agency. We provide education, enrollment, and lifetime support services to current and future Medicare beneficiaries. But the most important word there is education. We really love what we do, which first and foremost is explaining what Medicare is, how it works, and walking people through all of the little pitfalls and nuances and things that are just quirky about the whole program. So we've learned so much about it and we love sharing that, and education is truly our passion. We know that when you understand something better, it becomes less stressful. So that to us is the secret to your success with Medicare. These are the states that our team at MP Group covers, and we're filling this in all the time. So if you're from outside of the immediate area, hopefully you'll see your state here. If not, reach out and we might be just about to add that state in terms of coverage as well. All right, so what we plan to touch on today is we're going to define the parts of Medicare, parts A, B, C, and D, and then we'll tell you how Medigap fits into that equation. That's almost always one of the first questions that we get from new clients. What are parts A and B specifically? They don't even understand what they are, so we know we want to start right there. From there, there's always a lot of confusion between the path of Medicare that we refer to as the Medicare Advantage program, or Part C, or the original Medicare path. Sometimes people will refer to that as traditional Medicare. We'll talk about how those two paths differ in some specific ways. We're going to touch briefly on the two most common enrollment periods, the initial enrollment period when you turn 65, as well as the special enrollment period that occurs for people who are eligible for working past 65 and delaying Medicare enrollment. We're going to spend a little bit more time on Part D. That is one of the most confusing parts of Medicare year after year. And next year will be really exciting because it's going to change in a big way. So we're going to tell you about those changes. And then I'm going to make sure that we end today by talking about the upcoming Medicare annual enrollment period. This is a time of year where you get hit with a lot of Medicare messaging, and it can be pretty difficult to know what's marketing and what's real. So we'll talk about that and in there today. Okay, so starting with the parts of Medicare. And I hope everyone likes analogies, because I do, and I have a lot. And some of them are, oh, okay, I'm always thinking of new ones. So I'll share those with you. So first of all, we're going to talk about what is called original Medicare. And that's parts A and B. So this is where Medicare all began about 60 years ago. These two parts of Medicare fall under Social Security, and Social Security gave them the name Original Medicare. So super original name, but that's what it is. It's Original Medicare, Parts A and B. Now, these two parts of Medicare have always belonged to the federal government. They still do. They're two very separate funds within the Medicare Trust Fund, and two very specific sets of law that govern how Part A works and how Part B works. So think of this as very locked in. This is your official Medicare program from the federal government. Part A, it actually has the name hospital coverage. You want to think of it very specifically as inpatient or admitted types of care. That's more helpful than the word hospital, because if I go to the ER, or if I go get some sort of treatment in and out of the hospital the same day, if I have an outpatient surgery at the hospital, everything I just mentioned, even though I did it at the hospital, is going to fall under Part B. Part B is your outpatient care. So think Part A is inpatient or admitted care, and Part B is outpatient care. Part B's official name is medical coverage, which has bugged me from the beginning, because I think if I'm in the hospital and what we're doing here is not medical, what are we doing here? So I think it's just more clear to understand that Part A is admitted care and Part B is outpatient care. Now, under Part A, you'll also find care in skilled nursing facilities, rehab care, skilled nursing at home, home care, and hospice care. Part B, as you can imagine, looks very different today than it did 60 years ago when Medicare started. If you think about all of the things that would have happened as an admitted patient 60 years ago, a vast majority of those things are now able to be performed as outpatient care. So there's been a major shift in how we receive healthcare in this country over the last several decades, and that has impacted what Medicare costs and really how we pay for it. So it's a bit of a shift that I think if you understand why it's different than it was when Medicare started, it helps you understand maybe why things cost more on the Part B side. All right, so again, Parts A and B are strictly from the federal government. And from there, we do have Medicare insurance offered by private insurance companies. And your other two official parts of Medicare are going to be completely provided by private insurance companies. So the first is Part C, and Part C is the Medicare Advantage side of Medicare. So with Part C, private insurance companies contract with Medicare to provide A and B services, and usually also Part D services all inclusively in one plan. So we're going to get into more details on that, but Part C, think of that as a Medicare replacement plan or an all-in-one plan offered always by a private insurance company, but because they are so contracted with Medicare itself and following extremely rigid Medicare requirements, they are going to be uh, uh, very much a part of the official Medicare program, so known as Part C. And then finally, our fourth official part of Medicare will be Part D. With Part D, we have prescription drug coverage. So this came about as we started A and B of Medicare, and we did not, I say we as the federal government, did not factor in prescription drug coverage, as it was much less of a consideration 60 years ago than it is now. Of course, all of you know that prescription drug costs have skyrocketed, especially in recent years. Usually those costs are associated with really remarkable medication that we didn't have years ago. But of course, there is a cost to that. And again, we're going to talk about that in more detail. So Part D, these plans are always either built into Part C of Medicare as an interior piece of a Part C plan, or they're offered as standalone plans. So moving on from the four official parts of Medicare, hopefully we didn't lose anybody. Can you see? It looks like we have our participants. Oh, I'm so sorry. That was really just alarming there. Okay, so from here, let's talk about Medigap. So Medigap is actually a bit of a slang term. It refers to what are officially called Medicare supplement policies. Now, Medicare supplement policies works specifically with Medicare A and B only. So if you want to think of Medicare A and B, which remember are just from the federal government, think of those like a little Lego block that has the two dots on it. So that's one of your Legos where you can place something on top of it, and a Medicare supplement is going to be placed right on top of that Lego. So maybe that's one of the skinny pieces with two dots, but it locks into just A and B to pay after Medicare A and B pay. So we think Medigap is a better term because it really describes what's happening. It's filling in those gaps that Medicare A and B would otherwise leave to the Medicare consumer to pay. One of the things that you'll note if you are already on Medicare or if you're getting ready to be Medicare eligible and we work with you and explain A and B in more detail, there are some really significant out-of-pocket costs associated with Medicare A and B. And what's most important to know about those costs is that they are not capped in any way. There are no annual and no lifetime maximums on what a Medicare member could be responsible for out of pocket after a Medicare A and B pay. So that's why these Medigap plans are so important. They will provide that protection from what can be really runaway costs potentially without some kind of secondary coverage in place. Now, Medigap policies or Medicare supplement policies are always offered by private insurance companies, but their benefits are standardized, and these standards are established by Medicare itself. Now, here's an area where Medicare did not do us any favors because they named the Medicare supplement or Medigap plan types with letters also. Why we couldn't have gone with numbers or colors, pick anything else, but all of the Medigap plans are known as Plan A through N. So remember that the parts of Medicare are A through D, and the Medigap plans are named Plan A through N. Why did it have to be that hard? If I had $1 for every time someone said to me, plan whatever, and they mean part B or part A, and then they'll say part G, but they actually mean plan G. So if you have been confused about this in the past, you are not alone. That is very normal. All right, so the benefits are standardized across those letter names. The older plans, A, B, C, are things that you would have perhaps if you've been on Medicare 20, 25, 30 years. And then the newer plan types are going to be those letters later in the alphabet, but typically Plan G is what a lot of people who are starting Medicare now will be looking at. Now, these plans can vary quite a bit in terms of their premium amount or monthly cost. So factors that will influence what you pay for a Medigap policy are first and foremost what state you're in. That represents the healthcare market that you're a part of, but also your gender. Tobacco use status is one, and your age. So there are all sorts of factors, and it can be very hard to sort of pinpoint. This is an area where we come in and explain how these policies work, where you're located, and really help advise on understanding how to select that plan that is going to be a good fit to your A and B if you choose to go down this path. All right, so we talked about the 12 options. Again, they're standardized by Medicare with letter names, but they are plans, not parts. So Medigap plans are what you would plug in to A and B to fill in the gaps. Okay, so we talked about Medigap, and a lot of people are familiar with that because that Medicare supplement or secondary insurance option has been around almost as long as Medicare's been around. And so people are quite familiar with that. The alternative to that is going to be the Medicare Advantage or Part C type of Medicare arrangement. So in other words, if I am getting ready to enroll in Medicare, to start Medicare for the first time, I'm leaving my employer insurance and I have A and B, and I know that A and B have some out-of-pocket costs that are completely unlimited. My objective is to address that, and there are really two main ways that I can address that. I can keep my original Medicare and add one of those Medigap or Medicare supplement plans to it, or I could opt for that Part C of Medicare, where I'll have all of my benefits in one plan. So we're going to compare those two methods or types of Medicare coverage and just highlight the differences between the two. This is, again, probably the second thing that people ask us after they say, okay, what are parts A and B? Tell me what that means. How do they work? And then they want to know, what is the difference between Medicare Advantage and Medicare Supplement with original Medicare? So I mentioned that there are these two options. So hopefully this visual will help you keep that in mind. Going back to the Legos, on this side over here, you have your A and B, and then we added this little Lego on top of that. And this one's like an add-on on the side. When I have A and B and I choose to have a Medicare supplement, remember the Medicare supplement only covers what A and B offer. And A and B did not initially offer Part D or prescription drug, so I add that as a separate standalone piece. On the Medicare Advantage side, everything is packaged together in one plan offered by a private insurance company. Now, by law, these plans must cover the same medical benefits, the same health benefits as I would have under Medicare A and B. And they also, again, because what is built in is Part D coverage, those Part D requirements for the standalone plans will also apply to the Part D coverage in an Advantage plan. And all of those requirements are designed to protect the Medicare consumer to make sure that what you select is going to meet the minimum standards of Medicare itself. So on the left side of the screen, you have a little bit of a hybrid arrangement. You have the federal program, then you've plugged in a private plan to work on top of that, and then you've added a private plan that's contracted with the federal government as a side piece. It actually works quite well. Instead of, it might sound a little confusing and cumbersome. It's a nice arrangement. And for some people, this arrangement where everything is packaged together is the choice that appeals to you. So comparing the two side by side. So on this screen, we are still talking about, on the left side here, we're talking about original Medicare A and B with a Medigap, a Medicare supplement plugged in. And on the right side of the screen is Medicare Advantage or Part C. So let's really specifically talk about who is paying your healthcare claims when you're enrolled in these different options or these different models of having Medicare coverage. So on the left side, when you have original Medicare A and B plus a supplement, original Medicare is the primary payer of your claims. So when you go to the doctor, your only concern is, does this doctor take Medicare? Over 96% of all healthcare providers in the country take Medicare, original Medicare. And so your supplement can be from any company, from the largest to the smallest, and it will do its part paying after Medicare pays. So your first payer is original Medicare, literally the federal government, and the second payer is the Medigap plan. And then under Medicare Advantage or Part C, your Advantage plan, that private insurance company that contracted with Medicare, is the primary and only payer on your claims. So that means logistically, when you have a Medicare Advantage or Part C plan, you do still have to have A and B in order to be eligible for this Advantage coverage. But your A and B benefits have been leveraged into this Part C enrollment. So that Medicare red, white, and blue card with A and B on it is effectively dormant. You put it away and you only exclusively use that Medicare Advantage or Part C card from the insurance company that offers this Advantage plan. So all of your claims will go through that plan, and you cannot separately have anything go to original Medicare. That's a misconception some people have, that they can use that plan or they could use A and B, but they do only use that private insurance, the Medicare Advantage plan. Now, how does that work? Well, the federal government is paying the private insurance companies that offer these Part C Advantage plans a fixed monthly amount. Right now, that amount is just over $1,000 per person that's enrolled in a Medicare Advantage plan. So what you see going on behind the scenes is Medicare, a federally funded program that, like all our federally funded programs, needs some help. They are able to stabilize their costs by giving a fixed monthly amount to this private insurance company, and the private insurance company is taking on the risk. So they're taking on that assumption, or they have the assumption that they will be able to cover this member of their plan to the same extent that original Medicare would, using that amount that's allocated for each member, and still be profitable. So if you ever wondered like how it all works, that's what's going on behind the scenes. So in a lot of ways, it's great for the federal government. This is a way for us to stabilize the costs of the Medicare program. And it can be great for the private insurance companies and for people who understand how these plans work and feel like it's a right fit for them. It can be an option for them, but neither option will be right for every person. So it's important to evaluate how this all works and put the pieces together and understand what's the best fit for your needs and healthcare budget. And part of that is understanding who you can see with these different types of Medicare. So with the original Medicare model, I mentioned that over 96% of all healthcare providers in the country take original Medicare, and that's who you can see. Again, it doesn't matter which insurance company has issued your Medicare supplement plan, they will pay their part as long as you see doctors that take Medicare. On the left side of the screen, you do not need referrals. There are almost no prior authorization requirements. There are no networks. So it's very different usually than what a lot of us are used to from private or individual plans or group plans prior to getting to our Medicare eligibility. On the right, with the Advantage plans, these plans are usually network-based. So they're going to be an HMO, or these days we do see a lot more PPOs, but there will be a network of providers and your costs will be lower when you use a network doctor. With an HMO, if you go outside of the network, you'll pay all of the cost of that care. If it's a PPO, you'll usually pay a little bit of a higher out-of-pocket amount, but you'll have some coverage from your plan. Sometimes these plans will have requirements for referrals to see a specialist. And one of the most common things that people will note about these plans, studies have shown that the prior authorization requirements are pretty high on this side of Medicare. So that's something to be aware of, that they're, as managed care plans, receiving that funding from the federal government and doing their best to cover the members, but also remain profitable in most cases. Their goal is to manage the care and make sure that all of the procedures and treatments that are planned are medically necessary. So you have definitely a lot more eyes on what you and your doctor are doing on this side of Medicare. So next you have differences in costs on the left side of the screen with original Medicare. I did not mention earlier, but I'll explain now. Medicare Part A for most folks will have no monthly cost. Part B does have a monthly cost that will go up each year. In addition to that, when you add a Medicare supplement policy or plan, you are adding an additional monthly premium. From there would usually be a monthly premium associated with the standalone prescription drug as well. The goal, though, is that you will have minimal out-of-pocket costs. So you're paying monthly premiums for your coverage, and those premiums are going to cover your care, whether you go to the doctor twice that year or you spend the whole year in and out of the hospital and having surgery and therapy and so forth. Your premiums keep your costs very, very level and minimal out-of-pocket costs regardless of your use. On the Medicare Advantage or Part C side, your use will dictate your costs throughout the year. So you'll have highs and lows depending on how much healthcare you use. The premiums that you pay to the plans themselves are very low in most cases, but then you do have those out-of-pocket costs associated with the majority of services or treatments. So they're going to be copays or coinsurance, often a deductible. Now, all of those payments, what we call cost sharing amounts, will add up and cannot exceed an annual maximum. Every year, Medicare sets the highest annual maximum for these plans. And one of the ways that these plans compete with each other in markets where there's good competition is they'll say, okay, our annual maximum is a lot lower than Medicare's max. And consumers really like that because they know that their deductible and copays and coinsurance are adding up to a much lower number before the plan will then take over. So that's one of the things that's variable from plan to plan, but your cost under the Advantage side really all comes down to how much healthcare you use. And if you reach that maximum in any given year. So we touched on Part D and looked at that on the previous screen. Remember that on the left side with original Medicare and a Medigap, the Part D plans are added separately. And with the Advantage or Part C side, typically Part D is built into the Part C plan. Additional benefits. This is a really interesting piece here. So if you think about 60 years ago, this may make sense, or you might be shocked to learn that the mindset around our teeth and our vision and our hearing was very different than it is today. So 60 years ago, dental health, how well you see, how well you hear, were sort of wants, not needs. And they were not included in original Medicare. Medical needs of our eyes are absolutely included with original Medicare. So you can see an ophthalmologist if you have an eye illness or injury, if you have cataracts, glaucoma, macular degeneration, all of that is medical, and that's covered by Medicare. But basic vision, eyeglasses, contacts, an annual check of your prescription, that's not included. On the left side of the screen, it was not a part of A and B. And because the Medigap is only picking up as a secondary payer, it's not a part of Medigap either. Dental, our teeth were a want, not a need back then. Now we know better. Now we know that dental health impacts heart health. It impacts how well we eat and nutrition. With vision, if my vision isn't corrected properly, I'm more likely to misread a prescription bottle or perhaps have an accident of some sort. So we understand better that these things are health concerns and not just extras, but they are not a part of original Medicare. The other one, hearing. So again, that was just like, oh, great. If you want a hearing aid, go ahead and get it, but that's not considered medical. Well, now we know you're going to be more likely to not follow conversations and maybe withdraw, and it can lead to depression. Not being able to hear well can lead to a mistake, misunderstanding with a doctor, or again, some kind of accident. So we would love to see all of those things added to original Medicare, but it's really hard to change that Medicare law, which overall is for the protection of the Medicare program. So it's sort of a mixed blessing where that's concerned. But because those things are items that people want and really can't understand why they're not a part of original Medicare, those are typically what you'll find as extras that the Part C or Advantage plans are allowed to offer. So they're, again, getting that funding from Medicare on a monthly per person basis, and they construct their budget to say, our plan is going to offer X dollars per year in dental benefits and maybe towards eyeglasses or towards hearing exams and hearing aids. So if they are able to offer these extra benefits, then they will, because they know that consumers really want these. Now, keep in mind what happens when funds are tight. So maybe the amount that a plan or that all the plans are being issued for Medicare Advantage coverage goes down and healthcare costs rise. And I'm telling you this because this has all been happening and is going to impact the 2025 plans. You start to cut back, right? And so what gets cut first? Sometimes it can be the extras. So keep in mind that these are additional benefits, sort of like while supplies last, if you want to think about how these fit into the whole Medicare Advantage side of things. Finally, one of the most important things that we always want to educate new Medicare eligible consumers about is how enrollment and eligibility works for these two very different models of having Medicare coverage. Especially where, where we're mostly regionally located, most states, Maryland, Virginia, DC, Delaware, most states and throughout the country are going to have rules about Medicare supplements that say that you're only eligible, you're only guaranteed acceptance without any medical underwriting when you first start Medicare Part B. It's a 6-month period. It's literally called Medicare Supplement Open Enrollment, and it lasts for 6 months from the start date of your Part B. Now, that does not come around every year, which is something that we have found most people, even people who've been on Medicare for a few years, don't understand. Medicare supplements are not part of the Medicare annual enrollment period. So to secure a supplement for the first time and not be concerned about whether or not your current or past health conditions might impact your eligibility, that's a really important thing to understand, that it's a one-time shot at that coverage in most cases, not an annual option. Now, some of you who have joined us today, especially if you're on Medicare and on a Medicare supplement, may have heard about something called the Maryland birthday rule. And that is something that I can share more about offline. You can also read about it a little bit, but in the interest of time, I won't go into great detail, but it does reflect the way that different states can handle Medicare supplement policies and how that can change what you pay for coverage and also potentially opportunities to change that coverage. The Maryland birthday rule, though, in case you've read something about it and want to reach out if you have questions about it, it does not open up a chance to get a supplement if you don't have one already. So it does not change this very important concept of understanding that Medicare supplements, if you want one, and you don't want to worry about your health impacting your eligibility, you want to get that supplement when you first start Medicare. Medicare Advantage, on the other hand, these plans are open to everyone in the service area of the plan who has Medicare A and B without regard to your health status. Everyone pays the small, same premium. And everyone is eligible year after year during the annual enrollment period. So these plans are never based on your health status. Okay, I'm going to take a breath so that everyone else can. Sometimes when I can't pause for questions, I feel like I want to answer the questions I know people are thinking about. So I'll just say one more time, feel free to reach out to us directly because there's certainly a lot more that we could cover on each of these topics. And we want to give you some of everything and some of the things that we think you're probably thinking about. So don't forget, just reach out to us. Okay, so next we're going to touch on the two most important enrollment periods and make sure that everyone understands how these work. So the first one that most people experience is the one that's centered on your 65th birth month. Now, this is your whole birth month. So my birthday is October 10th. October is my birth month. My Medicare eligibility is going to begin on October 1st. I won't tell you what year, but it's going to start on October 1st. My husband's birthday is October 1st. So anyone who's here today or has a friend or family member who has a first of the month birthday, be sure to make a note of this. My husband's Medicare eligibility is going to begin on September 1st. Only first of the month birthdays do that, but I run into them all the time. In fact, I just spoke with a couple earlier this week and they're both first of the month birthdays. So it's something to be aware of. But most of us have a birthday somewhere in the middle of the month. Even if my birthday was October 31st, my eligibility, my Medicare benefits can begin on October 1st. But the way the enrollment period works is that I am eligible to apply as early as July 1st. I can apply for Medicare A and B starting July 1st, and I can apply anytime in July, August, and September. I can also apply in October, but that's going to push my effective date of Part B specifically out by a month. Then I can apply in November, December, and January, the whole month. And when I apply in these last 3 months, again, I'm pushing my Part B effective date out, which can bring some complications. So it's not usually ideal. But most of the time, we're going to apply in one of these 3 months here and start on the first of our birth month. So this is how the initial enrollment period works. But a lot of people will not be starting Medicare during this enrollment period. So let's talk about who that can be. And that takes us into those who are going to work past age 65 or perhaps have a spouse or partner who has the health insurance that's covering them and is going to work past that Medicare eligible individual's 65th birthday. So how does this work? Well, it all comes down to the number of employees that the employer offering the coverage has. If that employer has fewer than 20 employees, then that individual turning 65, even if they or their spouse plan to work for 10 more years, that individual will need to enroll in Medicare A and B. And this is really important for a lot of reasons. One of those is that late enrollment penalties can apply if you delay that enrollment and your coverage is not creditable for Medicare. But it can also cause delays because if you don't enroll in certain specific time periods, you're going to be limited to the next general enrollment period for adding Medicare Part B specifically. If that sounded a little confusing, don't worry. These are the types of things that we work out for people individually. These are the areas where each person's specific birthday, family circumstance, the type of coverage you have now will really come into play. And that's where we'll work with you to understand what your unique time period and considerations are. But it's important to understand that the size of the employer is what dictates whether or not you can delay enrollment in Medicare. Now, if you or your spouse who has the coverage for you is working for an employer of 20 or more, then you can go ahead and delay Medicare enrollment. Again, it's best if we kind of talk through your circumstances in more detail just to make sure we're not missing anything. But that is the key number for understanding whether or not you can postpone enrollment in Medicare. Now, you can go ahead and start Part A of Medicare if you are going to stay on that employer coverage after age 65 and delay Part B. Remember, Part A has no monthly cost for most people. You've earned it. It could help out. And so you might as well go ahead and take it, except if you are the employee and you have a health savings account or HSA with a high deductible health plan. Those folks will not want to add Part A, and we can talk to you about that if that situation applies to you. All right, let's go ahead and talk about COBRA. We mentioned HSAs and we also mentioned COBRA because this is another common mishap that we'll find. People will reach out to us after they discover that their COBRA coverage cannot be primary insurance after they are 65. So what happens is sometimes people will leave an employer and they have the opportunity to remain on their current insurance through COBRA. If they're over 65 and they don't immediately start Part A and B, and unfortunately, most people don't know about this, including HR representatives. So people don't really get this message. We'll help you work your way through this, but it's something to be aware of. You do have to start Medicare A and B. Without A and B, that COBRA coverage really can't work. And unfortunately, the way we discover this is that they will be just fine taking those monthly premiums from you and or the company. And at the exact point where your health status changes and maybe some very large claims come in, there's going to be a trigger that notes your birthday, and they're going to reach out to you and they're going to say, hey, we saw those claims come in. We happen to notice that you're over 65. We'll be happy to pay 20% or so after Medicare A and B pay. And you think, well, I haven't gotten around to getting Medicare A and B yet. I was so busy separating from my company. I just took COBRA and went on my way for a while. I was going to deal with Medicare later. That can be a horrible, very costly mistake. If you're over 65, you have to have A and B. And at that point, you're probably not going to want to elect COBRA for the cost. You'll want to transition over to Medicare. So we want to catch situations like this, the HSA situation, as early as possible. We're always happy to talk with folks so that we can understand and help you understand the various factors that will impact your unique Medicare enrollment period. There are other enrollment periods that we won't go into detail on today for the sake of time, but those two, your initial enrollment period and working past 65 are the most common. So let's spend a few minutes talking about Medicare Part D. Now, what I'm going to share on the next screen are the coverage stages for Medicare Part D in 2025. In 2024 and for many, many years, Part D has been made up of 4 coverage stages. Well, the good news is that in 2025, that has been reduced to 3 coverage stages. So great, we have a less complicated program to follow along and understand. Well, the bad news is that due to a really significant change in Part D that I'm about to explain, most people's costs associated with Part D will be going up next year. So let's take a look at what that looks like. All right, so we refer to these coverage stages of Medicare by starting with the first one, the deductible coverage stage. Now, one thing that's important to understand, especially if you have an end of the year birthday, I know some people here today do. When you start Medicare, it's always a calendar year on parts of Medicare and their out-of-pocket amounts, especially deductibles. So you can start Medicare on December 1st, but the plan year will begin again on January 1st. So you're getting a very small segment of the year for whatever deductible you may pay and any thresholds that you would need to meet. That's the case for everybody. If you retire in the last quarter of the year, you're going to have a start date of Medicare, but then everything will start again on January 1st, and that happens every year. But the first of the now 3 coverage stages is the deductible stage. When you are in this coverage stage, the Medicare member will pay the cost of the medications. So it's the retail cost of the medications, which can vary from plan to plan and pharmacy to pharmacy, until they have met their deductible. Now, some plans will not have a deductible. Next year, that will be very few plans, and a few plans will decrease the deductible from the maximum set by Medicare. Again, next year, that will be very few plans. Most plans will have the maximum deductible, which is set by Medicare each year, and next year, that maximum deductible is $590. Now, in past years, including this year, we have seen a lot of plans that will exclude really inexpensive medications. Those are usually placed in the lower tiers, tier 1, tier 2, sometimes tier 3, excluded from the deductible. So that means that if I'm only taking a really low cost statin, for example, it's probably in tier 1, and most plans would say, you don't need to pay the retail cost, just go right into the copay stage for your medication. So we're going to see less of that next year as costs tighten up a bit, but that is something that can happen. You can have inexpensive medications excluded from the deductible. On the one hand, that's great. On the other hand, it can be confusing. So you can fill 2 or 3 medications from January through April and pay little copays, or sometimes, almost nothing. And then all of a sudden you fill a new prescription in May or June, and you have to pay this big out-of-pocket amount. And you think, what happened? Well, you're filling something that is subject to the deductible. And so now you have to start chipping away at it. And that's usually when people remember, oh, I think we did talk about that, or I read about that. So it can be a little confusing, but that's how that works. The next of the 3 coverage stages is the initial coverage stage. And so once you've met the deductible, you're fully in this stage where you're paying either a copay, a fixed monthly amount, or a coinsurance, which is a percentage of that cost of the medication for the medication. Now, you are paying these amounts out of pocket, that all are being counted and can potentially reach this new $2,000 annual out-of-pocket threshold. This is the first time, 2025 is the first time that Medicare Part D has had a true out-of-pocket maximum. So this right here, this $2,000 maximum, which has been mentioned a lot in the political discourse lately in one of the debates. If you've heard about this, this is what we're talking about here. By mandating this maximum on all of the plans, we are seeing these tightening effects on the plans themselves. So we're going to see higher monthly costs for the plans. And I've mentioned the higher deductibles and fewer medications exempt from the deductibles. And it all points back to this new maximum out of pocket. A very small percentage of the millions of Medicare consumers out there will be incredibly positively impacted by this change. And I have met so many of them. I've had clients over the years who've had out-of-pocket costs. This number will shock many people, but I've had a client whose out-of-pocket cost after the best plan could be found for her medications was going to be over $30,000 for the year. And I've had several clients, even after coverage, have out-of-pocket costs in the $12,000 to $15,000 range. So they're very few individuals, but you can imagine what life would be like if you were one of those people taking one of those extremely high cost medications in years past. This measure, and all of this comes from the Inflation Reduction Act. This is one of the pieces of that legislation related to Part D. This measure is designed to make sure that people, like I just mentioned, don't ever experience that again. So again, if you're someone who ever has taken an extremely high cost medication like an oral chemotherapy or immunotherapy, this is a real life changer for you. And it could be for any of us down the road, but to limit the out of pocket to $2,000 per Medicare member per year, it will bring the cost of Part D up for everyone. So it's a trade-off, but that's what's happening here. Okay, now the last coverage stage. So for those folks in the examples I just gave, of course, those individuals taking those very high cost medications would meet this threshold of $2,000 out of pocket. And instead of continuing to spend past that point, they would go into the catastrophic coverage stage. So really anyone who throughout the year meets this $2,000 out of pocket threshold is going to benefit by going into this last coverage stage where for the rest of the calendar year, they will not have any out-of-pocket cost for their covered Part D medications. Now, that's the key word. One of the questions we've heard a lot lately on this topic is, will the things that I'm getting a great price on when I order them from Canada, will they count? Unfortunately, they won't. Will the medications that I'm using GoodRx for count? And unfortunately, they won't. Will my hundreds, even thousands of dollars of supplements and over-the-counter medications count? Unfortunately, no. So this does only apply to covered medications, but again, for certain Medicare consumers, this will be a really life-changing update to the Part D program starting January 1st. Now, some folks may be wondering, well, what if I hit this maximum all in 1 month, all in the month of January or February, the first time I use my plan? That's quite a possibility. That's been happening over the years. And now we are going to have something featured in all Part D plans that will help with that. And that is the prescription payment plan option. So this is basically a way to pick up your very, very high cost medication. And there are definitely some where the out-of-pocket cost is going to be that whole $2,000 in one shot. And if you don't want to spend $2,000 at one time, I wouldn't either. By participating in this optional program within your Part D plan, you'll be able to spread those costs over several months. So this is a feature that's going to help a lot of people with their monthly budget and their high prescription drug costs. Other things that have been in place for a couple of years, but that not everyone is familiar with yet, and these also are features of the Inflation Reduction Act, specific impacts on Part D, are that covered insulin products on all plans will be offered at $35 or less per month. Now, keep in mind that word covered. So there are a lot of insulin products out there, but plans will only cover certain individual products. So those are offered at $35 and sometimes less per month. And for the past year, we've had recommended vaccines with no out-of-pocket. So you don't have to meet your deductible and you don't have to pay a big copay or co-insurance on those vaccines that have in the past been really costly. I've talked to Medicare members who were paying $200 out of pocket just for a shingles vaccine in the years before this went into effect. And that's really frustrating because you're told to go get the vaccine and then you have a big bill to pay for that. So we do love these features here. Again, there will be costs for implementing all of these features, and that's just an overall increase in the set costs of these plans. So higher premiums, higher deductible, higher copays and coinsurance, fewer items exempt from the deductible. And in many cases, there'll be fewer items on the plan formularies. One thing to note about Part D is that you will always in any Part D plan have a minimum of 2 medications that are on that list of covered drugs that are considered suitable for any health need you could have. So that's important. If you're worried about, well, what if every plan is designed to meet that what if with a minimum of 2 medications? Okay, so let's end on this enrollment period that we are about to begin next week, kind of. The plan information launches on October 1st, but the enrollment period truly begins on October 15th and runs through December 7th. All plans selected during this time period will begin on January 1st. Now, in the annual enrollment period, you get all of this messaging. I referred to that earlier, the intense increase in Medicare marketing that you see on TV, that you hear on the radio, more mail in your mailbox, more email coming in. And all of that is generally leaving you with the impression that you have to do something and that everyone else is paying less than you. In fact, not only is everyone paying less than you, most people are paying zero and they're getting money back in their Social Security check. On top of that, they're getting groceries and gas and rent and utilities and gift certificates to wherever, get a massage and a gift card to Home Goods. It can feel like you're missing out, and all of that is marketing intended to interest you in something that may or may not be right for you. So be careful. The truth is that you do not have to make a plan change. So if you are here today and you are already on Medicare, your coverage that you have today will be your coverage on January 1st if you do nothing but pay the premiums. So if you make no changes, your coverage does not end and it does not change unless your plan has notified you that a change is being made. Sometimes a plan will end or migrate into another plan, but they'll notify you. If you haven't received that notice, if you're happy with your coverage and you make no changes, that will be your coverage on January 1st. And the second thing to remember is, as with everything, if it sounds too good to be true, it warrants further investigation. And the details are going to be what's most important. In the fine print, you'll hear or read things like, well, to get money back for Part B, we're not going to give you prescription benefits in this plan. Well, to qualify for this plan that helps with rent and utilities and groceries, you have to be very low income, in most cases eligible for Medicaid. Well, to qualify for this plan, this or that. So, of course, there's a lot to understand, but it really helps to be skeptical and remember that if it sounds too good to be true, then it warrants further investigation. What you actually can do if you choose to during the fall annual enrollment period is entirely limited to people who are currently on Medicare plans. So if you're here today because you're approaching your Medicare eligibility, don't worry at all about this enrollment period. It actually doesn't apply to you. Your enrollment period will be tied either to your birth month or that retirement date. But this enrollment period is for people who are on Medicare and they have an Advantage plan, for example, and they want to switch Advantage plans, or they have original Medicare and want to start an Advantage plan, or vice versa, they want to leave an Advantage plan and go back to Medicare A and B. Now, this one is important because remember, if you want to go back to original Medicare A and B, but you want to add that Medicare supplement to lock in on top of it, you might be looking at a situation where your health circumstances would be a factor in that. So that's one to be very careful of, and certainly speak with someone directly about that scenario. If you are on Medicare now and you have a standalone Part D plan, and maybe you saw updates in the mail about that plan that make you think, I really need to take a second look, this is your time to do that, as you can change your Part D coverage to a different plan. If you missed your initial enrollment into Part D, it is limited to this enrollment period. So this is the time to add that coverage. And finally, if you, and this is a very rare circumstance, but if you accidentally started a Part D plan and you had other coverage that's creditable, this is your time to get out of that plan. Okay, so I'm going to switch from this screen. I think everyone probably jotted down our information and put up our last screen that we need to end on for Blue Heron. And I just want to tell everyone that I'm so happy to have been here today, and thank you so much for participating. We're always very happy to be invited and to talk about Medicare. We enjoy the Medicare education process so much, and we're just eager to meet folks that we haven't met yet. So please do reach out to us directly if you'd like more information on anything we talked about today or to clarify any of it. Thank you again for your patience with my power issue. That was crazy, but hopefully we got back on track, and I think we caught up pretty well. So appreciate the time, and I'll hang on here for a few minutes and keep this screen going. But
Emily,
thanks.
we just want to thank you again. And I take notes every single time. You're just such a wealth of information and have helped many of our clients, which we also appreciate, because at the end of the day, that's what we're here to do at Blue Heron, to help to make sure that they have a sound financial future, and Medicare and Social Security are such an integral part of it. One question I did jot down, because it's one that we get periodically, and that is regarding paying the premiums if someone is not on Social Security yet. Do you want to touch on that?
Absolutely. So the premium that you'll pay for Part B specifically will be billed to you if you are not yet receiving Social Security retirement benefits, and that's perfectly fine. That can go on for many years. So there's no requirement to start Social Security retirement when you start Medicare. If you choose not to, they don't have anything to take your premium from. So Medicare will send you a bill, and that bill begins as a quarterly bill. Sometimes it's more than a quarter when that first bill arrives. So if I sign up for Medicare very close to my effective date, by the time the bill is processed, they may have 4 or 5 months on that one bill just to get me caught up. Every Medicare bill will have a lot of information on it. That it includes ways to pay over the phone, ways to pay directly manually online, including a credit card option that does not include extra fees. So you can get points or cash back for your Medicare premium, actually. And then there's always information on the back of the bill and online about how to enroll in the Medicare electronic funds transfer, electronic payments process. They call that Medicare Easy Pay. So some people prefer to set that up for months or years prior to having it deducted electronically from a future Social Security benefit.
Great, thank you. Thank you very much, Emily. And as Emily said, there are people in various ages, employment, spouses who are employed, and that's where it can get convoluted. With our long-term partnership with Northrop Grumman, Sarah and I will oftentimes suggest that we even hop on the phone and get some feedback from the company benefits, and then bringing Emily into the equation as well, Emily and MP. So again, we want to be mindful of your time. We always appreciate that you have joined us for an education session. And if you have follow-up questions, please feel free to reach out to Emily, or if you didn't get her contact information, you can reach out to us and we'll be sure to get you in touch. So anything else? Are we all set?
I don't think so. As Margie said, I have a page full of notes, so a lot of great refreshers and new information. So we always appreciate that.
And I'll just add one final thing. It's very unusual that we have today 2 mother-daughter teams on our webinar. So we were kind of high-fiving each other on that on the front end. So we're glad to work with Claire as well. I know she's still listening in. So Claire, thank you for attending and for all your help too. Okay, everybody have a good day out there.
Much. All
Thank
right.
you.
Take care.
Thanks. Bye-bye.